Welcome to Seacoast Real Estate Academy. In today's video, we'll be covering all key terms found in Unit 15. Some key terms are repeated from earlier units. Be sure to check out the list at the end of the video for those key terms. Annual Percentage Rate, APR. The relationship of the total finance charges associated with a loan. This must be disclosed to borrowers by lenders under the Truth in Lending Act. Blanket mortgage. A mortgage covering more than one parcel of real estate, providing for each parcel's partial release from the mortgage lien upon repayment of a definite portion of the debt. Bridge loan. A short-term loan to cover period between termination of one loan and the beginning of another loan, between interim construction loan and a permanent takeout loan. Residential financing arrangement where homeowner borrows money under a second mortgage on buyer's unsold current home to fund acquisition of a new home. Buy down. A financing technique used to reduce the monthly payments for the first few years of a loan. Funds in the form of discount points are given to the lender to buy down or lower the effective interest rate paid by the buyer, reducing the monthly payments for a set time. Certificate of Reasonable Value, CRV. A form indicating the appraised value of a property being financed with a VA loan. Conforming loan. A standardized conventional loan that meets Fannie Mae's or Freddie Mac's purchase requirements. Construction loan. A short-term loan usually made during the construction phase of a building project. Consumer Financial Protection Bureau, CFPB. A federal agency created by the Dodd-Frank Act in 2010 to oversee consumer protection via financial regulations within 7 federal agencies. Conventional loan. A loan from private investors that requires no government insurance or guarantee. Department of Housing and Urban Development, HUD. A federal cabinet department active in national housing programs. Among its many programs are urban renewal, public housing, model cities, rehabilitation loans, FHA subsidies, fair housing enforcement, and water and sewer grants. Equal Credit Opportunity Act. The federal law that prohibits discrimination in the extension of credit because of race, color, religion, national origin, sex, age, or marital status. Fair Credit Reporting Act. Protects information collected by consumer reporting agencies, such as credit bureaus, medical information companies, and tenant screening services. Information in a consumer report cannot be provided to anyone who does not have a purpose specified in the Act. Fannie Mae. A quasi-government agency established to purchase any kind of mortgage loans in the secondary mortgage market from the primary lenders. Federal Reserve System. The country's central banking system, which controls the nation's monetary policy by regulating the supply of money and interest rates. FHA loan. A loan insured by the Federal Housing Administration and made by an approved private lender in accordance with the FHA's regulations. Freddie Mac. A corporation established to purchase primarily conventional mortgage loans in the secondary mortgage market. Ginnie Mae. a government agency under HUD that plays an important role in the secondary mortgage market. It sells mortgage-backed securities that are backed by pools of FHA and VA loans. Home equity loans. Sometimes called a line of credit, a loan under which a property owner used their residence as collateral and can then draw funds up to a prearranged amount against the property. Jumbo loan. A residential mortgage loan in excess of acceptable loan amounts for purchase by Fannie Mae or Freddie Mac, also called non-conforming loans. Loan fraud. A crime in which the purpose is to misrepresent or omit information on a mortgage application in order to obtain a loan or a larger loan than could have been obtained had the lender known the truth. Open-end mortgages. A mortgage loan that is expandable by increments up to a maximum dollar amount, the full loan being secured by the same original mortgage. An equity line mortgage. Package loan. A real estate loan used to finance the purchase of both real property and personal property, such as in the purchase of a furnished home that includes window coverings and major appliances. Predatory Lending Act. Unscrupulous, sometimes fraudulent, lending practices usually intending to make repayment impossible, designed to take advantage of unwary borrowers that are frequently the low-income, uninformed, elderly, or non-English speaking. Primary mortgage market. The mortgage market in which loans are originated, consisting of lenders such as commercial banks, savings associations, and mortgage brokers. Private mortgage insurance, PMI. Insurance provided by a private carrier that protects a lender against a loss in the event of a foreclosure and deficiency. Purchase money mortgage. A note secured by a mortgage or deed of trust given by a borrower, as a borrower, to a seller as a lender, as part of the purchase price of the real estate. Rate lock. A guarantee from mortgage lenders that they will give mortgage loan applicants a certain interest rate at a certain price for a specific time period. Real Estate Settlement Procedures Act, RESPA. Federal law that ensures that residential buyers and sellers receive full disclosure of all settlement charges when a 1 to 4 family unit residence is financed by federally related first mortgage loans. The Act mandates a HUD booklet about closing costs, a loan estimate of closing costs, and a standardized closing statement. The Act, known as Regulation X, also prohibits kickbacks from lenders. Regulation Z and Truth in Lending Act implements the Truth in Lending Act, requiring credit institutions to inform borrowers of the true cost of obtaining credit. Reverse mortgage. A loan under which the homeowner receives monthly payments based on the homeowner's accumulated equity rather than a lump sum. The loan must be repaid at the prearranged date upon the death of the owner or the sale of the property. Secondary mortgage market. A market for the purchase and sale of existing mortgages, designed to provide greater liquidity for mortgages, also called the secondary money market. Mortgages are first originated in the primary mortgage market. Subordination agreement. A written agreement between holders of liens on a property that changes the priority of mortgage, judgment, and other liens under certain circumstances. Subprime mortgage. A loan made to a borrower with a credit rating below what is required for regular loans, creating greater risk liability for the lender that is countered by higher interest rates and fees, called B, C, or D paper. Trigger terms. Used in advertising, they include the amount or percentage of down payment, number of payments, period of repayment, amount of any payment, and the amount of any finance charges. VA guaranteed loan. A mortgage loan on approved property made to a qualified veteran by an authorized lender and guaranteed by the Department of Veterans Affairs to limit the lender's possible loans. Here's the list of key terms you can find in previous videos. If you like this video, feel free to share it with a friend. For more real estate education content, please subscribe to the channel. From all of us at Seacoast Real Estate Academy, thank you for watching.